Welcome back, everyone. Well, when it comes to paying off loans or credit cards, have you heard of the velocity concept or velocity banking? Well, tonight on an all-new Money Talks, we talk about it. Now, it can get a little bit technical, so we'll try and keep it real simple. Here we go.
Well, the velocity method is it's a very awesome concept.
So here's how it works. Let's say you have a 30-year mortgage on your house, $1,500 per month payment. Then you get a home equity line of credit, or a HELOC, that's the acronym, for $500 per month more. And you use the money from the HELOC to make larger payments on the home mortgage. In theory, by doing this, you can pay off a 30-year mortgage in 20 years or even shorter.
What it does is it takes your biggest asset. We talked about buying a home versus renting a home, but it takes your biggest asset, and then you can turn that asset into a debt eliminator, if you will.
Something very important to know. You'll need very good credit, and you have to have equity in your home. And the home will be the collateral for both loans.
They say, and this is where it gets a little tricky, is you put a large chunk of your income into the home equity line of credit to rapidly pay it off. And consistently doing that over time will allow you to actually then turn around, take another large chunk out, and actually start putting money towards your home.
Now, just like anything in life, we are about to give you the downside.
It's a great method, but I'm going to tell you now, be careful using it because it is very, very tricky to execute.
If interest rates on your HELOC are a variable rate and it jumps up, or if you lose your income or a big portion of it, you could face real financial danger.
That's the other thing about the home equity line of credit in the state of Texas. They're awesome tools to have, but they are very difficult to attain. Now, I think credit score has to be minimum 720, 750 around there, depending on the bank or depending on who you go through. Do all of your homework before, speak with an advisor, CPA, banker, get input from all of those people before you dive into it, because what you don't want to do is get yourself into a situation where now you're overloaded with debt.
That's true. Be careful. Now, a little over 13 million Americans do have a HELOC on their primary residence. So again, might not be a hugely popular option, but it's working for many. Bailey?
Making us money smart. Thanks so much, Chris. And College Station.